I find it interesting because I watch on Twitter and everybody's down on MicroStrategy and down on Bitcoin. How come it's not moving yet? And I'm just kind of like, guys, we've seen this pattern. This is old stuff. Just give it 30 to 60 to 90 days. And people always ask me, what are your predictions? I think by the end of calendar, 2025, gold will probably be at 4,000 and Bitcoin will probably be at 140, maybe 150. So, and we'll be kind of on to the next run. And I say that just because I don't think they can keep this thing going without, more programs that obviously indicate printing. And the programs are subtle. This shadow QE through twist of buying bonds, and I'm pretty sure they're into the banks and telling the banks to buy the bonds and maybe giving them swap lines at low rates that they're not telling us about. I mean, they're doing all kinds of things. They're pretty good at camouflaging what's really going on.
When you look at the global economy today, the cracks are impossible to ignore. Governments are drowning in debt, central banks are quietly reversing course, and inflation is no longer the temporary problem officials once claimed it to be. For investors, the question isn't if the money printers will start again, but when and how aggressive the next phase will be. And when that moment arrives, the only safe havens will be the assets governments can't create out of thin air. Few people understand this dynamic better than Larry Lepard. He's a veteran investor, sound money advocate, and the author of the new book, The Big Print, where he lays out in stark terms why the era of reckless monetary policy is far from over. In Lepard's view, inflation won't just be a headline for a few months. It will define the entire decade. And the big print, as he calls it, will be the moment when the US government unleashes trillions of dollars into the system in order to hold the debt pyramid together. In a recent interview, Lepard explained why he believes Bitcoin and gold will see explosive moves in the months ahead. Despite skepticism on social media and frustration over sideways price action, he argues this pattern is familiar. Gold tends to move first, sniffing out inflation, and then Bitcoin follows with far greater strength. His targets? By the end of 2025, gold at $4,000 and Bitcoin pushing past $140,000, potentially higher if inflation accelerates faster than policymakers admit. Today, we're breaking down Larry Lepard's most urgent warnings and predictions. We'll examine why he thinks inflation is here to stay, how Bitcoin and gold fit into the picture, and what the big print will mean for everyday savers and investors. So make sure to stick around until the end. And if you value this kind of analysis, hit that like button, subscribe to the channel, and let us know in the comments what price targets you see for Bitcoin and gold as this cycle develops.
Most Austrian guys do. And so here we are in kind of a really messy situation. And, as we talked about pre-show, I think one of the great memes of the decade will be Lynn Alden's, nothing stops this train. I mean, sadly, the way the government in this country is constructed, they use money to buy votes and to maintain their power and to maintain their positions. And there are certain things that are untouchable in terms of spending. And, they kind of keep kicking the fiscal can down the road. And, one can do that. But another chapter in the book is entitled Stein's Law, which says that if something cannot go on forever, it will end. and you cannot continue to grow debt at a rate in excess of the rate of growth of GDP forever. At some point, the two lines have to start to come together again, and that either can happen by a big downturn or by massive inflation or both. And so, my bet, the book's bet, your bet as a Bitcoin holder, mine as a Bitcoin holder and a gold holder, is that they'll choose the inflationary route. And Besant just told us that. He came out and he said, look, we're cutting back expenditures, we're getting all this revenue from tariffs, but really the solution to this problem is growth. We're going to focus on growth. And that's okay. He's right. Productivity enhancements, AI growth, that's all good. And they're going to get some of that, but they're so deep in the hole that the amount of growth they need can only come with inflation.
Yep.
And so my belief, and I remember it because I was a teenager in those years, my belief is we're looking at a decade that's very similar to the 70s, where we have these recurring bouts of inflation. And maybe there'll be several times the Fed will try to tighten to tamp down inflation, but each round will be worse than the prior round. And so that's kind of what I think is coming. And that's why I think, the message of the book to people was we really, as individual adults trying to take care of our families, we need to take some of our savings and put them in things that are protected from inflation. And those are things which the government, by definition, cannot print. And there are really only three of those in the world that are monetarily based, and they are Bitcoin, gold, and silver. And silver probably less so because it's been pretty much demonetized. And then there's another one, real estate, but that's not really a monetary asset. It's a hard physical asset and has other uses. So, and then stocks to a degree, but stocks are kind of they're a mixed bag because, they can issue more shares and the economy turns down. And by the way, right now the stock market's not very cheap. So that's kind of the big picture of my view of where we are right now. And I think what we're waiting for is just the next leg to start. And it's interesting that we're having this conversation now here on September 5th, because it wasn't but a few days ago, gold was doing a very long bull flag below $3,500. And silver was doing kind of a consolidation of a little breakout at $35. It was in the 36, 37 area. And in the last 2 weeks, I think it's about 2 weeks is the time frame. And you go back and look, and gold just went through 3,500 with authority. We're now at 36. And more importantly, silver went from 36.7 to 41. And so to me, these are a warning sign that the next wave of inflation is about to begin. What I'm going to do now is share my screen, show the window that we were talking about before, which I think is very interesting. This was a chart prepared by my partner, David Foley. He's a very bright guy. So what we're looking at here, Walker, is a chart that shows from early 2018 to the present, maybe a week old, the price of Bitcoin in orange, appropriately.
Naturally.
And the price of gold in gold. And the scales are different because in this time frame, gold went up 200% and Bitcoin went up 2,000%. So you can't really compare the amount of the move. Bitcoin, as we know, is superior to gold in price performance and has been for a long time, and I think will continue to be. And for aggressive investors, it is clearly the best choice. The only trade-off is it's a little more volatile than gold. Not a little more, it's a lot more volatile than gold. But here's what I find interesting about this chart is that there are several instances in history where gold has smelled the oncoming inflation and moved first. And probably the most notable one is early 2019 when Powell pivoted and that kind of, it just became clear that financial conditions were getting tight and they were going to have to loosen. And gold smelled it. Gold on the right-hand scale was, about 1,000. It scored it up to 1365, or higher, before it went up to 2,000 roughly in COVID. But notice that nice move in gold and Bitcoin. Meanwhile, Bitcoin's just kind of going sideways, not really going anywhere. And then at some point, the Bitcoin, market woke up and was like, hang on a second. There's been a lot of debasement here. We had COVID, we printed all this money, blah, blah, blah. And it took off like a rocket sled. And, notably, as I say, gold went up 30, 40%. Well, Bitcoin, as you and I both recall, because we were there, Bitcoin's went from 10,000 to 50,000, like quickly, So it vastly outperformed gold, and then of course, the gold smelled the tightening, started to come down. Bitcoin followed and came down even more, and that was Sam Bankman-Fried. And then of course, another run, okay, maybe we do have more inflation, but no, we don't, came back in. Then they both went down when Powell started tightening in 2022, and Bitcoin went down more than gold. Again, it's more volatile. But then gold, and in this particular case, gold again started to smell it. The Bitcoin's going down right here, and gold is going up. What's that all about, right? But eventually Bitcoin got the memo, started to go up, and then gold came down. Bitcoin didn't come down as much. And then, of course, then gold really started to go up in 2023, took out 2,000. In 2024, 2,500. And of course, Bitcoin, came off of the bottom and just has rocketed up to 100, right? And actually even higher. And in each case, though, again, gold moving higher here, Bitcoin still going down, but then comes back. Gold moving higher, Bitcoin coming down, but then comes back. And so here we are, and this isn't fully up to date because gold's now over the 3,500 number. It's into the 36 area, right? So it'd be off the chart, not by a lot. I find it interesting because I watch on Twitter and everybody's down on MicroStrategy and down on Bitcoin. How come it's not moving yet? And I'm just kind of like, guys, we've seen this pattern. This is old stuff. Just give it 30 to 60 to 90 days. And people always ask me, what are your predictions? I think by the end of calendar, 2025, gold will probably be at 4,000 and Bitcoin will probably be at 140, maybe 150. So, and we'll be kind of on to the next run. And I say that just because I don't think they can keep this thing going without, more programs that obviously indicate printing. And the programs are subtle. This shadow QE through twist of buying bonds, and I'm pretty sure they're into the banks and telling the banks to buy the bonds and maybe giving them swap lines at low rates that they're not telling us about. I mean, they're doing all kinds of things. They're pretty good at camouflaging what's really going on. But what is really going on, I mean, as you pointed out, you had a chart up earlier, it's a nice chart of M2, is that M2 is growing again. And we know, and particularly global M2, China has really aggressively been growing their money supply because they had a big real estate downturn. So,
yeah.
we can, I mean, it's all roads lead to inflation is kind of my, they used to all lead to Rome. Now they all lead to inflation. And so, I see much higher prices in both of these assets, for quite some time until we address this issue.
Lepard makes it clear that the fiscal and political system in the United States is designed to keep spending no matter the cost. Politicians use money to buy votes, protect sacred programs, and preserve their own power. The result is a structural refusal to deal with debt honestly. As Lepard points out, Stein's law reminds us that what cannot go on forever will eventually end. And in this case, the ending will likely come in the form of recurring inflationary waves, not a miraculous fix. For him, the message is simple. Families must protect their savings with assets the government cannot print. That means Bitcoin, gold, silver, and to a degree, real estate. From there, Lepard shifts to the charts, where the story gets even more compelling. Historically, gold has often been the first mover during periods of tightening and easing, sensing inflation before Bitcoin wakes up. That's exactly what we've seen again in recent weeks. Gold blasting through $3,500, while Bitcoin consolidates around $115,000. Lepard's take is that Bitcoin will follow the same script as in past cycles, lagging early, then ripping far harder once markets realize the scale of monetary debasement. And with global money supply already rising again, he argues the stage is set for the next explosive run. Let's get back to the interview.
Given all these technical developments, we all should be living like kings. I mean, we really should. I mean, the world is so much better as a place. I mean, that's the one thing today that is better than the 70s. I'm talking to you. We're in different parts of the country. It's real time. It's virtually free. I mean, we both pay for an internet subscription, but it's modest. I can call you anywhere in the world real time. I mean, hell, I was in college and I had 10 minutes on every weekend when I could afford to make a long distance call to my parents to tell them I was alive and doing okay and tell them what my grades were, I mean, that's really the way it was. And so, there's so many things that have gone right in the world and the technology. And by the way, it's that technology that's going to save us, because the microprocessor led to the distribution of information, led to the internet, led to the breaking down of the sclerotic big organizations, and has now led to Bitcoin, really, because without technology and the microprocessor and, distributed networks and everything else, Bitcoin, sound money in a digital form, would not exist. And so, thankfully, technology is going to save us, but, and it's a beacon of where we need to be going, as a society. And just the notion that we have to have this, asset-based debt to grow, it's so flawed. And it's, how did it get that way, right? How did we ever get to a place where we had 12 people setting the cost of money? It's barbaric, right? It should be the free market. It should be the balance of interest, balance of savings against the need for capital, set the interest rate, right? Free market pricing. But we got there because we had two parties in the country that were very, very interested in not having that system. One of them was the financiers and the banks and wealthy people, and the other was the government. And so what happened is they kind of figured out a way to make a deal between themselves where they would both benefit and the average person would suffer inflation. And it started with the Fed in 1913. They immediately broke their charter and helped finance World War I. So the government got its war paid for, and the Fed and the banks made a ton of money on war profiteering. And the effect of World War I was the price of everything doubled, right? So we paid for World War I. We just didn't pay for it through taxation. They paid for it by, the price level went up 100%. So, and that, wash, rinse, repeat, that story since 1916 to present, with a lot of interim bumps and developments, probably the biggest of which I heavily talk about in the book, was abandoning gold in 1971. I mean, pre-Bitcoin, gold was sound money. It was your only choice. It was your soundest choice. And obviously Bitcoin is sound money too. It's digital sound money. It's in so many ways superior to gold. But, I always remind Bitcoin people, you got to remember what got us here. And you got to remember how good things were on the gold standard. They weren't perfect, but they were better than they were on a fiat standard. And
Yep.
And when we got off the gold standard, that started the slide. And of course, it's that slide that then led Satoshi to develop Bitcoin, because as we know in Block 1, he said, Chancellor on the brink. And and he in a lot of his writings, he talked about how the abuse of the money printing privilege was a big reason for the invention of Bitcoin, because central banks will always and have always abused that privilege. And I think that inflation is going to really be the story of this decade. And I think people are underestimating the size of that risk. And they need to be much more aware of the size of that risk. It's about to get worse, in my opinion. 2, if that's the case, the transfer of assets from those who understand that and can adjust their behavior according to that versus those that don't is going to be really kind of mind-boggling. I mean, you're going to really, in 10 or 15 or 20 years, just like who went to work in tech and was an early employee at Microsoft or Google or whatever it might be, you're going to know in 10 or 15 years who understood sound money and saved in things that couldn't be debased, and you're going to know who didn't, because they're financially going to be in much worse shape. And to me, the transfer, the wealth transfer is going to be really significant. And so people need to think that through, because it appears to be going slowly right now, but to you and me who are in it and we're watching it, it's actually going really quickly. It's happening fast. I mean, we're going to be at $200,000 Bitcoin, probably sometime tail end of next year. I mean, it's pretty amazing what's happening. And in turn, if you think these prices are bad at the grocery store, hang on to your hat. I mean, sadly, I think it's going to get worse. I mean, I don't know, the whole pricing thing. I'm turning into my grandfather. I had a grandfather who's from Maine. He was very conservative. He was very cheap. And everywhere he went, he complained about prices. I mean, everywhere. We'd go to a restaurant. He'd get a bowl of soup. It was 50 cents. He was bitching. This used to be a quarter.
Yeah.
I'm turning into that guy. I'm turning into a cranky old guy who bitches about prices. But frankly, we're all going to be cranky old, not old. We're all going to be cranky and bitching about prices if they keep printing the way they're printing. In the 70s, 13% of the country was overweight. Now 65% of the country is overweight. I mean, it just goes into every single facet of where we are. And as you and I like to say, Bitcoin fixes this. I mean, if it just takes the grift away from a lot of these industries. There was a question, I know you put out a request for questions about things. And one of the ones that got asked, I thought was a really good question. I'll try and answer it for your audience, was what am I looking at to see, where we are in the whole process? And there's no magic to this, folks. I mean, it's pretty simple. I mean, I'm watching the bond yields, the 10-year bond yield. I'm watching the price of gold. I'm watching the price of silver. I'm watching the price of Bitcoin. I'm watching the 20 and 30-year bond yields. I'm watching M2 growth, and you can find that on the Fed's website, on the Fred website. Mm-hmm. And then I very carefully watch what the Fed says, what the Treasury Secretary says, what Stephen Miran, who's a Council of Economic Advisors, just been nominated to the Fed, says.
The bigger picture here is that none of this is happening in isolation. Every investor who pays attention to what central banks and governments are saying can see the clues. The Federal Reserve just cut rates by 25 basis points, signaling that the tightening cycle is over. Treasury officials are talking about growth as the answer, but as Lepard explains, the math doesn't work without inflation. And across the Atlantic and in Asia, central banks are also quietly expanding balance sheets again. Smart money is already responding. Hedge funds are buying up Bitcoin ETFs in size, institutions are diversifying away from bonds, and some of the wealthiest billionaires are quietly reducing equity exposure in favor of hard assets. They're not making these moves because they expect a stable decade of low inflation. They're doing it because they see the same inevitability Lepard describes in the big print, the next massive wave of money creation. When that comes, the flow of capital will chase scarce, hard assets, and crypto, particularly Bitcoin, will be the standout beneficiary thanks to its fixed supply and global adoption curve. That's why Lepard insists this is not a moment to lose conviction just because Bitcoin is moving sideways. It's the calm before the storm. If he's right, the coming years will deliver a wealth transfer on a scale that rivals the early days of tech, between those who understand sound money and those who don't. The choice for investors is whether to prepare now or get left behind later. So the question is, are you positioned for the big print? Drop your thoughts in the comments below. Hit like if you found this breakdown valuable, and don't forget to subscribe so you don't miss our future deep dives into the biggest stories shaping crypto and global markets. Thanks for watching,